Welcome to Alpha Insights. I'm Nate. Today we're digging into where the U.S. cannabis industry stands: jobs, sales, regulation, and shifting consumer habits. Joining me is Jonathan, market analyst and our go-to on sector trends. Remember, if you have questions as we go, you can ask us at stockalpha.ai.
Thanks for having me, Nate. Happy to break this down.
So start us off. What's the headline here? Is this an industry shrinking or just reshaping?
Short answer, reshaping. But the data shows some real strain. Employment in the legal cannabis sector fell about 2.7% year over year, and reported U.S. cannabis sales slipped roughly 3.3%. Analysts point to ongoing price compression and softer retail demand as the main drivers.
Interesting.
Right. When you look at the data, those drops help explain why margins and headcounts tightened at several operators. For investors, that means payroll and same-store sales are worth watching closely. If a company is trimming costs but holding or growing market share, that's a different signal than a business losing both sales and share.
Let's talk consumers. There was a striking stat about younger users and mental health. What did that show?
So, the real question here is how demand is changing. Survey data shows about 50% of Gen Z respondents with a diagnosed depression reported using cannabis, and CBD adoption was especially high among that group, around 70% for depressed Gen Z versus about 44% for non-depressed peers.
Right.
That suggests product mix matters. Companies with strong CBD portfolios, clear labeling, and medical or wellness positioning could connect more with younger, health-focused consumers. Honest clinical engagement and product innovation, think formats for symptom management, not just recreational, could be differentiators.
Makes sense. Now on regulation, Missouri was in the news about licenses. Walk us through that.
Missouri will open a roughly 2-week application window in mid-July for a new batch of micro-business licenses, and there are 77 licenses on offer in this round. Micro-business permits typically let smaller operators cultivate, process, and sell under one license, which changes the local competitive map quickly. Exactly. New entrants can push local pricing down in the short term. At the same time, nimble micro-businesses often become acquisition targets for larger multi-state operators looking to scale affordably and quickly. So state licensing calendars become both a near-term risk and a medium-term opportunity.
Yeah, that's a good point.
Analysts are watching a few catalysts. Earnings calls for major multi-state operators will give forward guidance that reflects how they see this price pressure playing out. Company commentary on margin assumptions, SKU-level sales, and regional same-store trends will be telling. Also, keep an eye on how funds are flowing into the sector. Big ETFs and the large operators often lead sentiment.
Quick practical question. What should listeners look for on those earnings calls? Any specific lines or metrics?
Look for management discussion of same-store sales, unit economics for different product formats, and detailed SKU trends. Are flower sales holding up while extracts slide, or vice versa? Ask about cost per gram if they divulge it, and about any regional price declines tied to licensing changes. Also listen for comments on customer demographics. Are they seeing more younger consumers or more medical use buying?
And regulatory noise. How quickly can licensing changes actually affect local prices?
Pretty fast in concentrated markets. When you add dozens of small operators with cultivation and retail rights, inventory goes up locally, and pricing can compress within months. But consolidation follows, and that can restore pricing power for stronger operators. So the initial effect is sometimes negative on margins, followed by a shakeout.
Any other risks investors should keep on a short list?
Yes. State tax changes, new compliance costs, and shifts in payment or banking access can all hit margins. And remember, macro factors like consumer discretionary spending affect retail cannabis just like other discretionary categories. Analysts note that price compression suggests companies may need to pursue efficiency or differentiation to protect profits.
Before we wrap, a quick reminder on the perspective here.
This is for informational purposes only, not investment advice. What I've described are trends and signals analysts are watching, not recommendations.
Great. Jonathan, any final quick takeaways?
Honestly, I was a bit surprised by how concentrated some of these shifts are. But the bottom line? Watch payroll and same-store sales, monitor mid-July licensing activity in states like Missouri, and track product-level demand among younger consumers, especially CBD formats. Those signals tell you where pressure is building and where differentiation could pay off.
Perfect. Thanks, Jonathan. And to our listeners, 3 quick takeaways to keep in your notes. 1. Industry employment fell about 2.7% and reported sales down roughly 3.3%, signaling margin pressure. 2. Mid-July licensing windows for micro-businesses, 77 licenses in that round, can increase local competition, then create acquisition targets. 3. Product mix matters. Higher cannabis and CBD use among younger consumers with depression points to wellness positioning as a differentiator.
Good summary. Thanks again for having me.
If you have questions about anything we discussed today, you can ask us directly at stockalpha.ai. We answer listener questions live. And for more market insights, head over to stockalpha.ai. Thanks for listening to Alpha Insights.